And now that gets us to the question of how much stimulus we are seeing in this country. And ultimately, is this a time when we should even be talking about the size of budget deficits? Let's talk to somebody who knows that story very well. Joining us now, Kevin Page, one of our regular guests here on BNN Bloomberg with the Institute of Fiscal Studies and Democracy and the former Parliamentary Budget Officer, joining us via Skype from Ottawa. Kevin, thanks as always for joining us.
Good morning, Jeff.
So let's just talk about some of the details that Glenn McGregor was just going through and how the money is being earmarked and ultimately allocated. What's been your view on all of that?
Well, my view is that it's definitely a historic size of stimulus. It's probably, I think the direct stimulus, the direct hit on the budgetary deficit in 2020-21 will be in excess of $50 billion at this point. So that's, more than 2 percentage points of GDP in 1 year. And so much larger stimulus than we saw in 2008-9 in the recession. I think the structure of the stimulus, like, the cash transfers, the wage transfers, or the wage subsidies, the tax deferrals, the liquidity measures, it's kind of a similar structure that we've seen, for the most part, Jeff, right across the world. It's a large package, but these are historic times.
Given that these are historic times, one of the questions we've been asking on BNN Bloomberg, is it even worth having this conversation around the size of budget deficits right now? Kevin, what would you say to that?
Well, I think, right now, I think if we just, again, look at what the potential hit could be on the deficit this year, in excess of $50 billion just through stimulus. So again, if you just do the simple arithmetic, we started, Jeff, with a deficit of about $20 to $25 billion federally for 2020-21. You add $50 billion with the stimulus, that gets you, in excess of $70 billion. Then you look at the revenue impacts from a weaker economy. And, I think, again, it's an open question how deep this recession will be, or this, this drop, at least in the second quarter. But, again, in the Ontario budget last night, they're talking about zero real growth for Ontario. I think for most people are thinking we're talking about a real recession through the course of this year now. So you're looking at a deficit well over $100 billion. And that would be about, 4 to 5 percentage points of GDP in Canada. And the sense is that, that deficit and that as a percentage of GDP, that will go up. What's different now, Jeff, vis-a-vis, say, the 1980s when we ran, similar deficits is interest rates. They're just so low. So the effective cost of borrowing is really the game changer, I think, for managing these deficits this time. They're manageable.
Given everything you're saying, I just want to let people know, Kevin, that we have seen the U.S. futures actually improve over the course of the morning, despite the fact that you saw these record jobless claims south of the border. What would you say is happening in the markets, which obviously had that huge collapse? But you're sharing some huge numbers with us, and yet it feels to a certain extent like some people were preparing for numbers that might be even worse. How would you explain those dynamics?
Well, John, I think, again, that the markets are, they're choppy or bouncy, and I think they will continue to be so. And I think until the markets feel that we have a handle on the pandemic. And once we, flatten these curves, these infection curves, I think then the markets will kind of ease down. Then they'll kind of look, we'll have a better picture how much the stimulus will really buffer the downturn in the economy. So I think, like, from day to day, it's really hard. It's hard for the markets to get a good read on this. But I think stability will come when we have a grip on this public health crisis.
So if the health crisis itself ultimately calls the shots on how this plays out, which is in many ways what Jay Powell, the head of the U.S. Federal Reserve, said when he did an interview on the Today Show on NBC today. This is pretty much unheard of a Fed chair to go on one of the U.S. morning shows. Does that mean that the federal government has to be ready to put more money to work on top of what has already been laid out?
Yes, I think there's definitely a lot of commentators, observers, analysts believe that we haven't seen the end to these support measures. just again to really offset the impact of really shutting down businesses through containment in the second quarter. So yeah, and again, even once we get beyond these sorts of measures, there'll be additional measures, I think, to support some of the sectors in Canada. You talked about the low oil prices at the start of the show. I think there'll be more of these sorts of supports for the transportation industry, retail. So yeah, these numbers will get bigger. And get back to the deficit numbers, John. We're probably talking about a deficit in the neighborhood of 4 to 5 percentage points of GDP now, assuming a modest decline. Again, we ran deficits in the early 80s in Canada, 8 percentage points of GDP. It wasn't a good thing because interest rates were much higher. We were not sustainable. But our long-term picture here, if these stimulus packages, support packages are temporary and targeted, and they come off as the economy recovers, then I think again, I think we'll see some light at the end of the tunnel.
Okay. Helpful context as always, Kevin. Thanks so much. Kevin Page, the former Parliamentary Budget Officer, joining us with the story of the aid coming from Ottawa.